Planning and execution. These are the only two activities that matter to an investor, and they're both equally important. A well-crafted plan poorly executed is as valuable as a poorly crafted plan executed to perfection. This video aims to provide the tools for you to create and execute your very own investing plan, taking you from your first deposit to your final cash out. You will have the greatest chance for success with a plan that you craft for yourself because you'll understand it better than a plan someone gives you. We begin by looking at creating the plan. We make a plan to chart a course through the future, and it usually has a concrete destination or objective in mind. Some plans are perpetual, and the objectives may be more akin to milestones or checkpoints rather than a concrete objective. When certain events occur, the plan tells us how to act or react in order to accomplish our goals. These events are known as triggers. A plan needs to be as specific as possible about the criteria of triggers. If a plan isn't clear about when to act, it will be more difficult to execute. Whether an asset's value is going up, staying even, or going down, a good plan will provide any required direction to deal with all of these scenarios. To stay nimble and efficient, we don't want to get lost in trying to plan for every single eventuality. Now, let's take a look at my own basic blueprint for an investing plan, beginning with the basic framework. The elements of this blueprint are all factors and questions you'll need to consider when you craft your plan. Here we have the basic blueprint for a plan. The plan has a couple actions. We're talking about investing, so those two actions are buying and selling assets. Timing has two different considerations. One is what is the total lifespan of the plan? And the other one is the most important one, when do we perform buying and selling? What are the triggers that tell us it's time to buy or sell? Because every plan has objectives. It may be to profit and take those profits so that you could live off it. Or your objective may be growth, achieving a certain benchmark of how much growth you want in your equity, or just satisfying a requirement to grow sustainably. Now, let's look at an expanded version of this. You'll remember timing is when to start and stop the plan, so that's the lifespan of the plan. The other thing about timing is when to execute your buy and sell activities. That can be triggered by things like price action or by a schedule. So when you buy, it could be, if it's based on a schedule, you could say, I'm buying this much every week or this much every month, whatever that frequency is. You also have to ask yourself, what is the portion? If you have a large amount that's broken into smaller amounts that you're going to invest at that frequency, you make that decision. You could also be buying based on the price, and that's where you become more of a price action trader. So you'll see a local top, say, and it comes down a bit, and once it's hitting a certain discount, then you might be looking to buy. So when you're looking to sell, the price trigger might be because when you bought something, it slid down in value and you were afraid of losing more value. So you said, I will only take this much loss before I exit that trade. You might be exiting for profit. And this is very important for both investors and traders, is that you set conditions for yourself when you start to de-risk. If you've made a percentage of profit on your entire investment, it's okay to take a portion of that investment out and just lock in those profits. That saves you from price rolling back on you, and it also gives you an opportunity to buy back lower if and when the price does go back on you. The other side of the coin is that the price could keep going up, but this is more about risk management than succumbing to greed and thinking that things will go up forever. They won't go up forever, and if you see a sharp spike, a sharp rise in something, take a bit of it out. The considerations for equity are how much is being invested total, and if you are operating on a schedule, what are those functional portions again for that buy plan. The other side of this is this entire investment in crypto going to be part of a larger plan? So is it like a 25% allocation of a greater portfolio that holds stocks and bonds and things like that? Or is this the only thing that you're exposing yourself to in terms of investing? Because a person might decide that if this is a small portion of their greater portfolio, then they might invest in riskier crypto assets. But if this is your entire investment pool, then you might weight more of your allocation decisions towards the safer cryptos, like the bigger, well-established ones, like Bitcoin or Ethereum or Solana or whoever is presiding in the day. This aspect here is important, the element of control. So asking yourself, is the plan working? That's okay to do because that will help you stay nimble while executing the plan in case you need to change the plan. Just have to be aware that you're changing the plan for the right reasons. Sometimes you come to a greater understanding and it's okay to change your plan to accommodate that. However, it is the downfall of many traders that they succumb to bias and they might see a trade not going the way they wanted it to go. And so they might start to redevise reasons to stay in a trade that earlier they told themselves to get out of. If you are changing a plan because something you're involved with is scaring you, ask yourself, why did you make this plan in the first place? Why was it an easier decision before you were in the trade than after the trade? And so that revolves a lot into the execution mind frame that we will get into later. By the way, this app here is called Simple Mind. It's pretty easy to use. Now we can look at a few sample plans and see how they'd be executed. As we go, think about which plan or plans appeal to you and why. If I had to guess, I'd say the biggest determining factor is how much time that you, as an investor, want to give to this endeavor. You'll see some plans require very little time, while other plans require constant monitoring. It all depends on your available time for this and what your objectives are. All right, here we have some sample plans. The variables don't really matter. You can adapt it to your particular situation, but I did want to create different scenarios so that you can understand how these different variables might affect or impact what your own plan for investing is. Before we get into these particulars, I just want to point out a few things why I've chosen this duration. If you look from here, if you were the person that just today was the day you decided to buy, 1,100 days before you ever see any chance of profit. That's 3 whole years that a person buying here would have to wait until their purchase was again profitable. And even then, another couple years later, we had price dip back down there. This is because this is a major kind of level of action. But the point here is, if you're going to make investments for your long-term future, have long-term durations. The longer your duration of plan is, the more chance you have of having it reward you. You can fine tune and tweak all the things to decide what assets you're going to buy, stuff like that. But do understand that sometimes, and this could be the day you buy and then price goes on another massive dip. And then here we are in 2027 and you're going, what happened, Patrick? Well, a market dip happened. Market dips happen. If tomorrow the stock market crashes, well, so is Bitcoin, except the stock market might go down 30%. Bitcoin will go down 90, right? Because it's a lot more volatility in the crypto market because of low volume. So when you look at these plans, understand that you should only be approaching this with patience. At the same time, consider that if you bought here and 238 days later, your investment has gone up 500%, you'd be insane not to take some profit off the table. You'd be insane not to take some profit off halfway up there or even here. So you need some sort of idea that when you reach really great profit goals, worry less about how much further it can go up than about the fact that it can come down. Because missing out on some gains, you have to realize that this market rather, presents opportunities all the time. So looking at the plans, these are spot trading plans because you're actually watching price action and you're making decisions. Over here is the investing plans. This is where I expect a lot of people who might be tuning into this channel, my friends, are going to be resting. You're probably not going to want to trade charts and stuff like that, but this is where I live and this is something that I like to nerd out and geek out about. Seeing the potential that this offers is important for me to share, but let's just focus here on these investing and timing-based plans. Using $1,000 is just a nice even number to illustrate these points. And if you are using $10,000, well, then, for the portion of this one, you'd be looking at $1,000 or whatever, however you modify it. Again, I'm just providing these plans as examples. I'm not saying any of these plans are great plans, although I am running variations of these two plans. This is a good plan to have, especially when you're in a market lull. And for me, it's been more of just spending what I can, but it's going to be different for everybody. So the super simple plan is, say you have $1,000 today, you know that you want to get into Bitcoin. You tell yourself, in 2 years, I'm going to sell whatever this is for whatever it's worth. I'm going to spend the entire $1,000. That's my total investment. I'm going to spend it right now. I'm buying only Bitcoin, and the exit condition for this trade plan, this investment plan, is that at the end of 2 years, I withdraw it. Now, if we go back to here, you can see that there were plenty of times where if somebody said, oh, that's it, after 2 years, I'm out, well, you'd be facing loss in a lot of these situations. However, there's plenty of situations where in 2 years, you'd be wildly up. The point here is that having a fixed duration is probably not the best way to approach this, but it is the easiest way to approach it. Plan B here is a variation on Plan A that involves a couple different modifications. So the first one is, instead of devoting your entire portion now, we break up the $1,000 into $100 increments. We have a flexible attitude towards the duration. So we say in 2 years, if our exit condition is met, 50% gain, then we'll get out. We may even get out before the 2 years if we see that 50% gain. But if 2 years goes by and we haven't seen our 50% gain, then we can wait longer if we have a reason to believe that the price will keep going up. This is slightly more activity because you are making these monthly purchases. So for example, this one here breaks out to 10 months. You would be spending $100 on the first of the month, just buying Bitcoin, not checking the price, not trying to time it, just spending it. And a lot of apps have that built in, have the ability to schedule periodic purchases. Plan C is a continuous plan. It is an investment plan because you don't really have an exit condition, but you are observing that there's a cyclical nature to that market. So another variable that I entered into this one is, instead of having a total to dedicate to this, perhaps you look at your income and you say, I can afford $100 a month to purchase crypto. So this one will just happen every month, monthly, until you decide to stop purchasing. And that could happen if you see a downturn, or if you've seen enough of an upturn that you decided to take some profits. The portion here, $100 a month, is defined by that kind of allocation, and we just kind of change with it. The frequency can be whatever you want for these, really. Like it could be change this to $50 every 2 weeks, or $25 weekly. Whatever is going to make sense to you, you kind of fill this in for yourself. This one here, like I said, does require a little bit of observation of the markets. One other thing worth mentioning about this too is that I noted here that this is where I start to talk about other token allocations. So Bitcoin being the safest one because of its largest market cap, because of the fact that it's proof of work, it's unhackable, it can't be messed with. Ethereum is a very large market cap. Its mission basically to become an external internet world computer. This here is kind of resembling the 60-40 split you see classic traditional finance applying to things like bonds and equities. All right, now, so you've seen the plans and you know what the steps are to take, but what does it look like on an app? What's the workflow that you're going to be using? Now's a good time to touch base with the people who will probably not be going any further than these three basic investing plans, and show you what does it look like to deposit
money from your bank account to your exchange app? What does it look like to buy and sell assets? And what does it look like to track and record your purchase prices and amounts, and to be able to have some sort of projection for your decision making in the future? So let's take a peek under my hood, and I'll show you some stuff here that hopefully helps. Most people are pretty comfortable using their phones with a lot of apps for everything that I do. I can do it on my phone. There's a couple things like TradingView and Excel for me that I find easier to manage large amounts of information in a laptop environment, like on Windows. But for all my basic routine stuff, the phone is fine. The first thing I'm going to show you is how do you fund your fiat account. Now, I'm using Newton. Again, you might use other ones. There's a lot of different apps where you can buy and sell crypto. Coinbase, Kraken, those are also somewhat popular ones. I don't like them that much. I prefer to use Newton. If I go into Newton, this is what it looks like when I boot it up. I have my amounts hidden just for the sake of privacy. To show you, if you need to put money in your account, you're going to fund via e-transfer. You send a request. How much do you want to put in? Right? It will have your email address listed down here. It will tell you what your weekly limit is, what your transfer time is. Usually, I send a request for an amount of money, and I go to my email. It's waiting there for me. Use that email to go into my banking app. I approve the transfer, and then I get another notification. Let's see what it looks like. I'm sending a request for $500. Yep, I'm confirming. The request is sent. I'll tell you. Now this I never do. I never approve e-transfer from inside the app. I always go and follow the instructions from my email. So I'm just going to back out of here, and I can see up at the top here, I've got a notification telling me that I have a request for money. I open it up. I bank with RBC. So this opens up into my accounts, and it's telling me what the requested amount is, who's requesting it, when does the request expire. None of this really matters. I know what to expect because I'm just going to go in now. I'm going to select which account, and I'm going to continue. So send it now. All right, it's been sent. And already, you can see up at the top there, there's a notification from both Newton saying that it was successfully deposited and the funds have been added to your account. If I go back to my Newton account, I would be able to see that, yeah, there's another $500 there. One thing to note is that try to keep your account stocked up in advance of your plans. And that might also include if you have an amount of money in there that you are saving just for responding to something. So you told yourself, okay, I'm on a normal scheduled buy, but boy, if this pulls back 10 or 20%, I want to have some money in there so that I could buy it. If you wait for a high traffic time and try to do that, then you have a chance that these transfers can take a couple hours. I've had transfers not go through instantly. By and large, the majority of them go through immediately, but it's those times when you're like, this is it. This is the price getting down to a point and it's going to bounce hard. I know it's coming back up fast and I want to be able to capitalize on it. If you don't have that money in there already, then you're risking missing the ability to act on a trigger. Now that we have some money in the account, we can buy some crypto. You won't have all of these listed when you first come in. This is a breakdown of my holdings in the order of them that I'm holding. So you can see I'm holding more Bitcoin than Solana, more Solana than Ethereum. This is kind of my loose rank and file in terms of my risk exposure as well. But I'm going to purchase some Ethereum right now. Now, if my increment was $100, my portion, I'm going to open up Ethereum. You look here, you can see this is the list price, $4,800 for one Ethereum. So I say I'm going to spend $100 on Ethereum. This is telling me what I will get, and it's also giving me the effective trade price right there. You can see that there is a difference of about, well, 50 to 60. Let's go quickly back. It's still at 4,800. So yeah, about 55, between 50 and $60. So whatever that is, that's not a huge spread, but it is good to be aware of the fact that you do pay for spreads. You do pay for fees when you interact with these apps. If you're recording it, record your actual buy price. I'm reviewing the trade. It's acceptable. It's telling me what it actually works out to down to the cent. I didn't hit it fast enough. This is my new quote. Price came down by a couple dollars from my ETH price. Great. Confirming the purchase, success. I've purchased this much. Now, I like to record all of the purchases because if I have to go back and I want to compare and say, oh, the price now is 5,000, was what I bought for less or more, or the price is 4,500, that's one way to do it, just strictly numerically. So opening up Excel, you can see up here, these are some sample purchases. This was an actual purchase. I'm going to feather it into these records. What's today? July the 20th. And I bought ETH, which is short for Ethereum. This purchase here was for the amount of 0.020592 Ethereum. And the price was for 48.5566. This over here is just a very simple formula. I'm just gonna, now that I've recorded this, I'm gonna delete it. Of course, I'm gonna have to come back because this is actually part of my records now. You saw me make that purchase. And that formula is very easy. It's this times that equals that. And then after you have that formula in there, if you're using Excel on your phone, you can just click the fill thing there and select how far down you want to fill those formulas, and then it will automatically fill as you go down here. This is just the sum of all of those, tells me how much is actually invested into this account since I started keeping the records. Of course, this was all constructed for your benefit up here. So I'm just going to highlight those and I'm going to clear the contents. This I will have to come back for. Now, that's the actual using a spreadsheet to record your ledger. There's also TradingView. TradingView gives you some opportunity to understand these things visually. First thing you'll notice about TradingView when you populate it with a lot of these familiar crypto call signs is because they're using the US dollar, that price is a lot different. Let's open up Ethereum. Up here at the top corner, you can toggle between USDT, which is a stable coin, or say the Canadian dollar. The Canadian dollar shows you this price. So we've come down a little bit from the 4,800 that we were just talking about. But for my sake, because it's always loading into this one, what happens is if you make a mark on the Canadian, it will disappear when you go back to the American. So you know that this is your price level. Whether or not TradingView has your actual numeric representation isn't really going to matter. that much. What you want to know is, where did I buy this? Just a quick tip here down at the bottom. You can press and hold on the date bar to drag and expand that out. You can also, along here in the price scale, you can press and tap. Stop that. You can press and tap and go up and down to expand and contract that. Now you can see there is a line there. You can set different templates for the type of lines and stuff. I'll do a whole video geeking out on what you can do with TradingView to manage that. But this creates a record. Now let's imagine a hypothetical situation. Let's say Ethereum goes down from here, and then it goes up to here, comes down to here, goes up to here, and that happened to coincide with some of my purchases. You know, maybe I bought here, then maybe I bought here. The chart never goes backwards like that, but just to chalk that up to bad scribble. Maybe when the price got up to here, I looked at how high above this price we were. And I thought, oh, you know what? Maybe I want to sell that. But that's more of a trader's thing. As an investor, you're just trying to get in at the best price and spend that time in the market. So this would give you a good sense of what your general, performance was. And if you look at the price and you see the price is over above everything, then start to ask yourself, is this a point where I want to take some profit? Should I still be buying if it's this high? And how does it look compared to the rest of the long term, right? Is this parabolically higher than we've ever been before to create a new all-time high? Or is this what looked like a very large run at a small time frame? Is it just part of a general, range? Asking yourself those questions will help inform your decisions, because you should have a level of flexibility where you recognize opportunities both to buy and to sell. As an investor, though, maybe you don't need to use TradingView. You don't need to use any of this. What you need to do is pay attention, maybe just look and know where your prices were. Using this, the nice thing about using the visuals is because then it doesn't matter if it's in American or Canadian. You have a nice visual representation of what your purchase activity has been like. So that's pretty much start to finish, between depositing some money and making a purchase and recording it. And as you record these purchases, you will start to see your pattern of buying, and if you're selling, your pattern of selling. And you can start to build your knowledge of the market and what your participation in it is going to look like. Now, I want to be mindful of the fact that I'm sure a lot of you have no experience with TradingView. Many of you have no experience with spreadsheets. Using those things can seem intimidating, especially when you load it up and it's not at all like what you saw in the video. But getting it to there means that it becomes your tool, and knowing how to use your tool your way is going to be part of your journey. And I'm here to help. I have templates of spreadsheets that I'm happy to share with you, and recognizing how much time you've spent taking this journey of learning and getting this far. I want you to know that now I'm fairly confident that after what you've been exposed to in terms of ideas and using apps and stuff here, that if we sit down together and you want some input or ideas how to build that stuff for yourself, it'll be very fruitful compared to me trying to lay it out for the first time. So, it's great that you made it this far. If you need any more help, please do reach out to me.